president of the Supreme Cannabis Company. How are you doing today?
Very good, thanks for having me.
So, what have you guys been up to recently?
So today we were happy to announce that we've entered into exclusive partnership with Khalifa Kush Enterprises. Yeah. That's one of the most exciting premium brands in the U.S. that was founded by artist Wiz Khalifa back in 2015.
Yeah, and it's making news all over the place. What exactly entails that relationship or that partnership?
So we met the group about a year ago, and it's quite interesting. We almost didn't meet them because we really don't believe in the kind of endorsement deals, generally, slapping a brand on top of someone else's product. But we're encouraged to go down and meet the team. We're really impressed by the alignment of values between our company and theirs. They look at quality, they respect the plant, and they really feel like this is the opportunity to build leading global brands that are going to last the test of time.
Yeah.
For us, that was 7 Acres here in Canada. For them, that was their Khalifa Kush brand, which is a really unique strain of OG Kush that they've commercialized in Nevada. They're looking forward to bringing it to California and a few other states as well.
Very nice. And how does the relationship work with Supreme, with 7 Acres? Are you hoping that, obviously, we're all waiting for that time when legalization happens in the United States? It's going to happen, we just don't know when. But are you hoping to have a relationship where one of you can be crossing borders at one point in time?
So this is about bringing intellectual property and expertise out of California and into Canada for Supreme. Yeah. So there's going to be a strong knowledge share. There's going to be consulting around strain development, around branding, around marketing. He has a full, KKE, the company, is a full team. So it's not working with one celebrity or an endorsement or anything. Obviously, he's the tastemaker. He's really driven the vision and the energy of the company, but he's got a really strong team around him. So we're going to get the benefit of their expertise. We're going to work with our genetics team to recreate Khalifa Kush for the Canadian market, and we also have included in the contract a right to take that intellectual property out to the global market as well, where they're prohibited doing so starting in California.
Gotcha. So that makes a lot of sense going forward. Now, when it comes to 7 Acres and what you've been doing with Supreme, how has it been since legalization? As many or most viewers, I can only imagine, are well aware, you guys are business to business, and that's the focus that you've chosen. How has it been since October 17th?
So that's been our primary business model pre-recreation. So with the legal market starting out, we were able to shift to a B2C model. So 7 Acres is on the shelf in 6 provinces. Mm-hmm. We took a bit of a different approach. We've always been different as a company. First, we focused on premium. So, for the last few years, you guys have, on this show and many others, talked about low cost and commoditization. We don't believe that to be true. We believe high-end cannabis flower is the most important segment in Canada and will continue to grow. We focus on producing the best cannabis in the country at scale. And we put that in our own brand, 7 Acres, out to the stores, and so far the demand's been great. To give an example, in Alberta, we're the most expensive 3.5 gram SKU in the market with our flagship Jean Guy strain. It's about $10 more expensive than the next competitor, so wow. Quite a big premium. And we were very encouraged to see that product sold out on the online store in about 48 hours. So just showing, using that one example, the strong demand that Canadians have for premium cannabis, and they're willing to pay a little bit more for something a lot better.
Yeah, I remember actually almost a year ago, there was an AGM meeting that I attended with you, and you were talking about the Cali Bud and how there's a market for this high premium cannabis that's more expensive than obviously your run-of-the-mill cannabis you'll find elsewhere, but it's in your eyes, in the eyes of a connoisseur, it's worth it. And one of the things we've noticed since legalization, there's a lot of talk that a lot of these LPs are not having good cannabis. Won't mention any names. There's a lot of talk of that right now. Do you think that as this continues, people are going to get pickier with their cannabis? They're going to recognize, what, it's not like a Coors Light or Canadian. We're like, just give me a beer. You get one of the two, you don't care. I have a funny feeling that cannabis consumers are much more picky with their cannabis. Is that why you're focusing on the high brand?
Yeah, so first of all, I don't think they're getting more picky. I think Canadians have had access to subjectively some of the best quality cannabis in the world for the last few decades. So Canadians, that's the starting point. That's where we chose to build our business, to be competitive with the illicit market. It's not a pricing issue, it's a quality issue that's going to determine if legalization wins or not. And quite frankly, viewing a large panel of competitor products, secret shopping, there's a lot of good stuff out there. There's a lot of stuff that probably toes the line between comical or insulting to a consumer, depending how you look at it. And quite frankly, it's a big business risk for companies that aren't able to put out what people want to buy. So to use your beer example, people forget Budweiser, Coors Light, those are actually well-manufactured products with great brands that people love, and they're not the cheapest price point in the store. So if you go to Kincardine, where our facility is, those are premium products people buy on the weekend. There's a whole lower category of beers that people might buy during the week, and unfortunately, I think there's a risk that some in the industry are in that lower quality of cannabis products.
Yeah, I mean, I follow it a lot, and we're constantly looking in our investors group, just looking at people's reviews, because at the end of the day, this is a new thing to a lot of people, and it's unfortunate that a lot of the cannabis that people are getting, allegedly, of course, is not what they seem to want to be getting, especially not what they were getting on the gray market as well. But I have been talking to a lot of people, and they actually have had high praise for the 7 Acres cannabis. I believe you guys just won an award on it as well.
Absolutely. So we were honored to win Brand of the Year at the Lift & Co Awards. So it was a great validation. And actually, I think that was the most important award out there, because it's really a team effort. It's the cultivation, it's the branding, it's the sales and the marketing, the whole thing that comes together for that award. But I think, not looking the other way, if you look forward, a gram of cannabis, I think, is roughly similar to a bottle of wine. It's a big dose for one person. It's a shareable dose for 3, 4, 5 people, depending who you are. And if you look at right now, that bottle of wine runs about $5 on the low end to about $15 where our flagship strains are. Well, for us, what's exciting about growing the business isn't just building new facilities to produce more cannabis. It's to produce better cannabis that we can sell at a higher price point. So, what's on our objective list is how do we get to the $20 price point, the $30 price point, and the $50 price point. And cannabis consumers listening to this are going to laugh and say that makes no sense. But anyone who's drank a bottle of wine knows those are price points that Canadians are very comfortable with. And that's the thesis of the deal we did with Khalifa Kush. They're living that and embodying that in the Nevada market today. So in a market that's usually about $15 to $20 per gram, they're selling it close to $30 per gram and gram equivalent for most of their SKUs.
Okay. Well, let's switch gears a little bit here and go into the company itself. What have you been able to do over at 7 Acres when it comes to production? How much production has come online? What are the stats right now for what you're doing over at Supreme?
Absolutely. So we are one of the youngest large LPs. We got licensed only back in 2016. So we'll celebrate our 3rd anniversary this spring. We've been very quick to bring on scale in our first facility. So 7 Acres is operating over 100,000 square feet of licensed facility, and we're producing about 12 to 13,000 kilograms per year at our run rate. But what's exciting is this is a project that we're very close to the end on. We're expecting completion of all of our flowering rooms by the end of the month. Licensing obviously will take a little longer through the spring, but through the middle of next year, we expect to hit that full ramp of roughly 50,000 kilos per year, which when you look at the price points we're achieving and the quality, I think makes that one of the most attractive businesses in the country. And
just to go back a little bit on the business to consumer, how you guys switched over that for recreation. Would you say, do you guys have a mixture of 50-50? Like, are you going, we'll go half business to business, we'll go half business to consumer, or are we seeing a shift? Are you seeing you'd much rather be in the stores opposed to selling wholesale to different LPs?
For us, it's a shift over time, but really it's the same business. So if you look at, our goal was to create a compelling retail brand and not be the retailer. So when we made a list of all the great brands that Canada's produced over the last 3 decades, there's a lot of great companies there. When you look at a list of great Canadian retailers, unfortunately, it's a much smaller list. And that's really was one of our initial thesis around why we didn't want to get in the retail business. In medical, that meant B2B sales through other licensed producer partners, such as Tilray, that purchase our product and do a great job with the repackaging, the medical sales and marketing and all of that. On the recreational side, it's about working with the provincial, public, and private retailers on the same concept. We produce a great product, we produce our brand, but we don't control that final point of sale. And in the short term, what that really allows is we can focus on the quality of the product, we can focus on the brand, and then we can focus on driving that national distribution, where currently our flower is available from British Columbia through to PEI.
Gotcha. And when it comes to your stock itself, are we looking at different exchanges in the U.S. or going up on TSX? What are you guys looking for right now?
Definitely something that we're looking at. So a big catalyst for us was completing our $100 million financing with Bank of Montreal and GMP about a month and a half ago. That was the last condition we needed to pursue an uplist from the venture exchange to the TSX proper. So we're excited to get that underway. And then, of course, we're looking at the U.S. exchanges and the increase in liquidity and investor awareness we can get from that, and working through the internal and external requirements for us to get there. It's actually one reason at our AGM next week we're seeking shareholder approval for a potential consolidation to assist with the marginability of the stock and the attractiveness for institutional investors, but also to help us get there in terms of the listing requirements should the management team and the board decide that's where we're going to take the company.
Yeah, actually, that was a question of mine, actually, from Taylor and Ian Richardson from the YouTube channel just before you came on. I asked them what questions do you have, and that was one of them for the 7-to-1 split. The reason behind it, are you going to still move forward with it? When it comes to that 7-to-1 split, if it is voted in and it was voted as, yes, you can do that, does that necessarily mean you're going to go 7-to-1, or does that give you the ability to do something within that range should you see that fit to get on a U.S. exchange?
So first of all, it was 5-to-1.
Oh, forgive me.
It's okay. And it's up to 5-to-1. So what we want now from our shareholders is the permission to pursue this and consider it moving forward, specifically to meet the listing requirements if we decide we want to take the company onto the U.S. exchanges. I understand a lot of the concern around perhaps some fears how consolidations can be used negatively, but you know, we're one of the fastest growing LPs. We're number 6 in the country in revenue and growing quickly, and we're well capitalized from our last financing. So really this is a position of strength to improve the liquidity of the company and build more value for shareholders over time.
Gotcha. And coming into 2019, we're almost finished 2018. I can't believe how quickly this year's actually flown by. When it comes to 2019, what is the focus of Supreme and what are you most excited about?
So for me, it's finishing the 7 Acres project. You know, that's been a passion project for me since we started in 2013. So seeing that thing hum at full capacity. But in terms of catalyst, it's continuing to grow revenue. This is a consumer goods business. This is about revenue, and this is about the quality of the revenue. And for the last few years, I think this industry has focused too much on cost. You know, margin is the delta between cost and price, and we really focus on how we can drive price point over time. And I don't mean just ramping up prices for the same product. I mean creating higher value products that consumers are happy to buy. Because when you look at the impact of a price increase versus, say, a cost decrease, generally speaking, that pricing increase is far more valuable in terms of positive impact to our bottom line. So we're really excited to continue on that. And then in terms of other projects, we've got our Lot 16 projects. That's the California style. Again, that's looking to spend a little bit more on the operating costs, grow some strains that take longer to mature, need a little bit more love and care, but where we think we can hit even higher price points. You know, for domestics, that's going to be exciting 2019 for us. And then, of course, what I'm sure every cannabis company has been talking about is all the derivative products, concentrates, vape pens, etc. And what's really exciting there is, if you look at flower plus the other smokable products, so vape pens and concentrates, in most mature markets, you're 70–80% of the market right there. And the key to doing well in downstream products that are ingested that way is high-end flower. So if you look at the best concentrates companies, the best vape pens, etc., the ones where they have really strong margin over time, they all start with really great flower as the input. So having that foresight to invest in 7 Acres and the quality of the flower there not only allows us to be a leader in that space, but is going to be our key advantage as we move into the downstream products in Canada. Yeah,
it'll be very interesting when those do start happening, because everyone's talking about vapes, and it's very. I was always really surprised it wasn't allowed in the in Bill C-45, but at the end of the day, I understand maybe that was a give a little, get a little type of thing to get that through. But I can imagine that's going to be coming down the pipeline very soon. No pun intended, of course, but it just makes sense to have that as a product offering.
I think we have to understand that the legalization of the vaping products is happening at the same time that Canada and the United States is struggling on how to regulate e-cigarettes. So we've seen, for example, a crackdown recently on flavoring agents. Well, that plays very well for Supreme. A lot of vape pens in the United States and in the gray market here are distillate, so you know, cannabis THC with artificial flavors. And that can, you know, be a nice product for some people. It's generally a low margin product because there's not a lot to protect the brand. If you take those flavorings out, you need really good cannabis that's rich in terpenes and has a pleasing aroma to extract that and put that into the vape pen to make something consumers are going to want. So for us, you know, seeing those restrictions on flavorings and anticipating we'll see the same in the vaporization regulations when we get them actually really plays into our strategy and will help us be a market leader in the vape category.
That's an interesting point, actually. I appreciate that, because it's kind of like those flavored alcohol, right? You can put any alcohol if you're throwing all this sugar and everything else into it, but if you're having it by itself, if you drink a whiskey by itself, you're gonna notice the flavor and the quality of the whiskey. Same goes with flour as well. And
I'm guessing the last time you bought whiskey didn't bend over and go to the bottom shelf either.
No, I'm a Gibson's Rare man. I'm a Gibson's Rare man. I'm a little picky with it, but no, I appreciate your time very much for coming on the show. For any of those who don't know, FIRE is the ticker. Your website for where they can find out more information about you.
www.supreme.ca, nice and easy.
Perfect. Thank you very much for coming on the show. I appreciate it very much.